This is Alan Bush with ADMIS. In the stock index futures, we are seeing prices higher now for the 6th consecutive day. Still feel that the main trend is higher, even though the Fed is likely to taper their quantitative easing program by another $10 billion at the next FOMC meeting at the end of this month. There is still plenty of accommodation in the banking system to take stock index futures higher. Also, we did have a couple of economic reports today. Did have existing home sales coming in a little bit stronger. We had the Richmond Fed Manufacturing Index also coming in a little better than the estimate. So some of the numbers coming in a bit stronger, so that's supportive as well. So nothing changing, still looking for higher prices in the indices. Over in the currencies, seeing the pound gaining. We are anticipating that the release of the minutes of the most recent Bank of England policy meeting to be released tomorrow could possibly show a more aggressive or a more hawkish tone to the interest rate policies from the Bank of England. Either way, the UK economy has been very strong, so we continue to believe that the main trend for the pound is higher and that the pound is likely to be the strongest of the major currencies. At the same time, though, the dollar index lower today, even though we do have ongoing tensions in Ukraine. For the last 10 months or so, we have seen the dollar index underperforming, even though we do have the flight to quality influence of Ukraine, which should be a bullish factor for the dollar index. That has not been the case. The dollar very severely underperforming the news. So that, to us, is a sign of weakness. So the dollar index is likely to be the weakest performer of all the major traded currencies. Interest rate markets narrowly mixed. We do have a lot of supply this week. In fact, there's a total of $86 billion in Treasury offerings this week, today, tomorrow, and Thursday. Once this supply is out of the way, I think we can see a new leg up, especially at the long end of the curve. So nothing changing in our long-term view on Treasuries. The main trend still appears to be higher, and any gains are likely to be led by the 30-year bonds. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.